All right, all right. How's everyone doing? Hello, hello, hello. Test, test, test. Hello, 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 hello. Hello, everyone. How is everyone doing? Can everyone see me? Can everyone hear me? Hello, SUI. Hello, David. Hello, Son. Hello, Josiah. Hello, hello, hello. Good evening, good afternoon, good morning. Hello, Don. How are you doing? Hello. Candles on live. Love to see it. A nice name. Hello, Adnan. Hello, Prezzo. Hello, John. Bluebird, thank you very much. Thank you, thank you. How was your week? My week was good. I had a good week. Was all right. We're going to dive into it as well. It was a good week overall. It's quite a nice week actually. I enjoyed it. Trading wise, it was nice. Personally wise, was good. Can't complain, to be honest. How's your week? How was everyone's week? Any struggles? Any struggles? Anything happened this week? Let me know. Tell me, please. Tell me. Change hairstyle so often. It's either this or it's or it's long hair. Long hair is going to take some while. It's going to take a while again. Was good. Perfect. Okay. Okay. Better. Nice. That's lovely to hear. 2R on Monday. Okay. Nice. Very good. Good, but it's a red week for me. Okay. A red week. I'm going to talk you some positivity. A red week is not necessarily a bad week. So a red week, there's a lot of lessons to be learned, a lot of experiences that you can learn from again to go again next week, for example. So usually it's a blessing in disguise. Hello, Timmy. Performed quite well this week. Only thing that killed me was over trading. Okay. Take it as a lesson, my friend. Take the steps, implement the steps to prevent it from happening next week. Green week for me. Love to hear it, David. Very nice. How was your trading this week? My trading was good this week. Was good. There were a few things that I'm a little bit annoyed at, more so at myself. This week was very interesting because every time I took a winning trade, before I took the winning trade, I took a loss. Every single time. Not every single time, but arguably every single time. Before I took the winning trade, I took a loss. I had a loss, and then a winning trade, loss, and a winning trade. It's not necessarily a bad thing, of course. It's still profitable, but it's just something for myself to improve. Didn't trade this week because before the week started, I realized the fundamentals and the technicals were not aligned. Okay, Bluebird. Okay. Fear, struggle, beauty. Okay. How much is your overall accuracy? With my current trading plan, around 60% usually. I skipped this week starting from Monday. Okay. All right. Can you also explain today's opportunity on gold? For sure. We'll dive into it. Learn a lot on the psychological side. Perfect. As long as you learn something, step by step, you'll get a lot better. Red week. Okay. If you did have a red week, if you did struggle this week, let me know. Why? Why do you think it is? Is there anything you struggled with? Ask me a question. Again, link in description. First link in description. You can ask me questions and we can dive into those questions as well afterwards. That's exactly what we'll do. Let me show you as well what that is going to look like. Let me see. Here it is. Okay, questions here. Again, you can join right here. Link in description as well. First link in description. You can ask any questions. If you did have any struggles or anything that is on your mind, let me know. We're going over the most popular questions right there as well, like usual. All right. Perfect, team. Let me see. Lost 0.22% today. Today was so ass. Yeah, today was a little bit tricky. It was a little bit tricky, to be honest. It was not the greatest, even though we didn't have NFP today. Yeah. Well, at least it's 0.22%. That's all right. That's worth it, in my opinion, to test it. Let's see. Start over with gold. Yeah. 2 hours on silver today. Okay, nice floors. Today I took 2 losses before the short played out on NASDAQ. Reason was that I did not wait until 10 a.m. high impact news. Okay. All right. Hello, Rohit. Hello. Okay, perfect, team. Let's dive into it. Let us dive into what we saw in the past week. And afterwards, we're going to dive into the questions as well. We're going to save the forecast. So the forecast is specifically for Sunday, 2 p.m. New York local time. So the exact same time as it is right now. Okay, let's take a look. I first want to dive into the economic calendar right here. Again, like some already mentioned, like we mentioned during the somewhat surprise live stream as well on, what was it, Wednesday? I believe it was Wednesday, or some people Thursday. NFP right there, since government is in a shutdown, NFP did not happen. So there was still a lot of speculation. Will it happen? Will it not happen? It did not happen. But overall, again, it's all right. It doesn't really impact, or it shouldn't really impact your trading in any sort, if that makes sense. It was just a regular trading day, if that makes sense. So I want to dive into a couple of trades that I also took right here in the past week. So if we take a look, this is the FTMO account. Again, I purely use this account right here for testing purposes mainly. It's not my main account. So all of these trades, most of these trades, except for one trade, one loss right there, were taken this past week right here. In my opinion, this was a week full of opportunities as well. There were loads of opportunities. It really depends on what is an opportunity for you, of course. That is also quite important to understand. So I want to dive into some of these trades right here. And of course, afterwards, we're also going to dive into the questions that we have. Okay, let's see. Let me make sure everything is set up properly. Okay. Let me move myself a little bit. There it is. All right. Let's first dive into the dollar before we dive into the indices, before we dive into gold. It's a very nice curve. Yeah, thank you very much. I'm quite proud of that. It's a very nice equity curve right here. So I want to dive deeper into this as well, because I think it's very important for your own trading to understand as well. My equity curve is not that volatile. It's, of course, 3% right there in a week is very nice, but most of these trades, the risk is $500. So that's 0.5% of this account. So it's a very nice, steady equity curve. That's also what prop firms love to see. But for example, I mainly trade for investors. Investors also love to see that. If you lose 10% one week, but you make 20% the next week, then lose it all again the next week, investors don't like that. Especially my investor would come knocking on my door and say, Arjo, what are you doing? Okay, let's see. If we first dive into the US dollar right here, the Dixie. We mentioned last week during the forecast on Sunday that we were looking at this. Let me get this out of the, how do I do that? Where is it? Where is there it is. Okay. We mentioned right here that if we do want to continue lower, we could run this rejection low right there, disrespecting the fair value gap that we have right there. Actually, it starts a little bit earlier, because when we have this daily fair value gap right there, what we saw is that we saw a very aggressive retracement already at the Sunday open back into the fair value gap right there. Okay, no signs of any rejections at that moment in time. Then we have this low. If we start running that low, we have, but this is very, very short term. We have a short-term clear path right here to now target the fair value gap, the fair value area. Again, the moment we start running it right there, we already reached those next targets. So that's not that interesting at that moment in time. Then right here, what we see is that we reach this fair value area and the larger fair value gap that we have as well. And then we start consolidating. So for example, if we do want to continue lower, we should run this rejection low that we have right there. And if we go into the 4-hour time frame, arguably there were some signs of running that rejection low, but very, very aggressive retracements afterwards as well. So what we see right here is that we just have one large consolidation. In these weeks, what is important to understand, when the dollar is in a scenario like this, where it's just consolidating, it's not really moving anywhere, of course, some traders, they will excel. They will do very well when it comes to consolidations. That's their thing. They rely on consolidations, if that makes sense. Majority of the traders rely on price moving from some point A to point B right there. So some kind of trend. So when you see a week like this right here, and for example, you go into a GU, you go into an EU, you go into an Australian dollar, US dollar, doesn't really matter, any of the majors right there, it's really not that interesting. So a week like this, you need to always somewhat filter the weeks. So of course, every week that you go into, you're going into it with a mindset, ideally, okay, let's see if we can make some profit this week. Now, not too much pressure on it, but let's see. Let's see how the week plays out. Once you realize, for example, on the dollar, that a week right here is likely going to turn into consolidation, this is not a profit week anymore. This is protect your profits week. So for example, on an EU, on a GU right here, this is not about making the most profit. This is about protecting the most of the profits that you made in the past week. It's very important to understand. So this is not a week where you really want to, again, generally speaking, for some people, it might have been an amazing week. Generally speaking, on the majors right here, this is not a week where you want to, again, pass a challenge, for example. Could you do it? Yes, but it's more difficult, if that makes sense. So what we see right here is that we then also have this fair value gap that we sting back into. Again, at this moment in time, it's what we touched a bit on Wednesday, I'm not sure. It's a parameters game. So either we now start running these lows right here to continue lower, or we start running this rejection high to continue higher. Everything that happens in between, the whole gray area right here, that's more likely, more susceptible to create consolidations. These fair value gaps are unreliable. And that's very important to understand, because here a lot of people get caught up in that consolidation, maybe get a little bit frustrated, and essentially you blow all your profits you made in the past weeks. So this right here is very important to understand. And what we are looking at is now we are stuck. We're stuck between two higher time PD rays, fair value area and fair value gap right there. And that's exactly where we are going to create these consolidations. So for me, the past week right here, dollar was really not that interesting. I barely looked at it. I just looked at it from perspective, okay, are we meeting parameters? No. Okay, let me just focus on the indices. So for me, the past week, I really focused a lot on the indices and also gold quite a lot right there. So let's dive into the indices first before we dive into gold, etc. Okay, if we start this week properly, and let me start this week on NASDAQ right here. All right, where did we start the week? Well, where did we leave it? We left Sunday right here with this fair value area right there. That fair value area, that is the thing, that is the PD rate, the resistance that we have that is preventing us from continuing higher at this moment in time. So again, what is my focus right here? I understand NASDAQ has been very bullish. We've been moving higher. I'm not forcing retracement. So a big mistake when you start trading fair value gaps is trying to understand, hey, we should retrace back into the fair value gaps to then continue higher. No. When you're trading all-time highs, or again, instruments right here that are bound to continue higher, for example, NASDAQ and ES, gold, then when do they continue higher? They continue higher when there's nothing preventing them from continuing higher. So what is the thing that is preventing them from continuing higher? Well, those are opposing PD rays, as I like to call them, resistance areas. So for example, here we have a bearish fair value gap, a bearish fair value area. That means that is the thing that is currently preventing us from continuing higher. If those are disrespected, they're not there, then the path to continue higher right now towards all-time highs again is cleared up. That's what we call an all-time high protocol again. So it's not about retracing back into this weekly fair value gap. It's more so about, can we disrespect the fair value area right there already? So right here, we disrespect it by running the two candle rejection high. And that's there. So on this Sunday, I was sitting there waiting. It's like a Christmas morning, waiting for my presents. Because right here, the moment the market opened up and we already started running these highs, that was my first trade of the week, right there. The moment we start running the rejection high, covering in case we do want to trade back into the fair value area, fair value gap right there, covering that to then continue higher, targeting a 1 to 2 RR. More of a swing trade, you could argue. This was my longest trade of the week as well, because I held it through all this price action right here and eventually came very, very close towards my stop loss right there. And then eventually it hit take profit right there as well. It was my first trade of the week. Now afterwards, what we are seeing is that once we start to continue higher, we reach into tiny fair value gap right there that we have. And I'm going to use ES as an example because that's where I took my next trades. So right here on ES, very similar price action. we reached into this swing high right there. When we reached into that swing high, we know that as bump in the road resistance. What is bump in the road resistance? Bump in the road resistance, it's like you're driving a car and it's just a bump in the road. So it doesn't withhold you from reaching certain targets, if that makes sense. This is not an area where we are expecting reversals to all of a sudden continue lower. No, but we can, it's a bump in the road, we can expect a rejection right there to then continue higher again towards the all-time high right there. And that's exactly what we saw right here, where we struggled a little bit. So what is important right here? If we want to disrespect this bump in the road resistance, we need to run this rejection high right there. That rejection high. So at the start of the week right here, or well, in the middle of the week, it's not the start of the week, I also took a loss right there because I also took a couple of losses right there. Afterwards, once we got the bigger rejection right here, on the 4 hour, we had this bearish 4 hour value gap. This is the rejection high from that bearish 4 hour value gap. So now diving into the lower time frame, to the 15 minutes right there, seeing if we are running the rejection high, then in turn also running this high, so disrespecting the bump in the road resistance that we have right there. This was my entry right here on ES during those days right there. Targeting a 1 to 2 RR right there, also a winning trade. Now, this earlier loss that I took right there, arguably a mistake. We can dive deeper into that as well a little bit later on. Okay, to understand this afterwards as well, this is the same protocol. So right here, if we go back to NASDAQ again, we have now reached an all-time high. What do you do at an all-time high? I personally don't do anything. What I do at an all-time high is I wait for this. I wait for these larger rejections right there. Because the moment we have those larger rejections, that is exactly where I now want to look to get involved again. So here, this 1 hour value gap is preventing us from continuing higher, right? It's the same process over and over and over again. So now if I go into the lower time frame right here, and we start to explode higher right there as well, again, which is simply overnight with these new value gaps right there, that again is a new entry right there covering, let's see, covering these lows right there and targeting again a 1 to 2 RR, which is close to the all-time high at that moment in time. And those were, again, a lot of trade opportunities right here on NASDAQ, on ES as well throughout the week right here. Very, very interesting. A week for me, full of opportunities right there. You could also argue later on in this week, we had a couple of opportunities on ES, not on NASDAQ right there. On ES right here, it's very similar with this price action running that rejection high as well to continue higher towards the all-time high. All right. So a very interesting week right here on the indices. Again, what I'm focusing on for the indices, especially in its current state, is buy over and over and over and over again. These are all-time high instruments that we're dealing with. So what that means is that historically, what do you see right here? Historically, we see that we are continuing higher. Sooner or later, we're continuing higher again. So at that moment in time, it is better to just simply look to buy. That's arguably the most profitable thing that you can do, unless you have specific data supporting the idea that you are going to look at shorts. But shorts are just generally speaking right here, lower probability. So is it impossible? Absolutely not. You can make shorts work for sure, but it's a lot harder. It's more work. It's harder. The margins are smaller because, well, the win rate is lower, etc. So your best bet is arguably just to look to buy over and over and over again. And then it's very hard to not be on the right side a lot of times, if that makes sense. And the moment you buy is the moment price, there's nothing preventing us from continuing higher anymore. So these fair value gaps are not there. We're not struggling with the resistance anymore. We're trading in between PD rates towards the next all-time high right there. That's where you want to buy over and over and over again. And it's the same for NASDAQ right there. And it's the same for gold. So all of my trades happened on either ES, NASDAQ, or gold right there for this past week right here on this account as well. So I'm not sure if I can see. This is it right here. So it was all, well, US 100, NASDAQ, it was all gold, it was all ES right there, all of my trades. So if we dive into gold as well, that's the same thought process. And this already happened on Sunday. So it was a Christmas morning because we had a trade opportunity on NASDAQ for Monday morning or Sunday even, and also on gold. So what we saw on gold right here, we had this last week right here, right, where we talked about we're running this rejection high from the fair value area towards the left. Now the path to continue higher is arguably cleared up towards the all-time high. We're just struggling with this bump in the road resistance right there. Okay. This is where we start seeing a larger rejection from it as well. 1 hour for value gap right there. So the moment we start running this rejection high from that 1 hour for value gap right there, with a clear path now to continue higher. Now, my first entry was a mistake right here. We reached these highs right there, and I entered like this right there. Why is this a mistake? For me, that is a mistake because I entered the moment we do have something that is preventing us from continuing higher, which is the swing high right there. So it's very reasonable that we are going to create a rejection. It's like buying into resistance. This is not smart because we can expect a rejection before we do continue higher. So this right here is where I took a loss right there before we actually start to continue higher. Now, I also caught the winner straight afterwards because what we see right here is once we create the rejection from this swing high, we create this bearish 50-minute fair value gap. Okay, we go into the lower time frame. I find the rejection high. The reason why I'm now going into the lower time frame is because the area of opportunity becomes smaller. So I somewhat I need to use the lower time frames right here. This is the rejection high right there. The first rejection, the first candle is already a great rejection. When we start running that right there, this now becomes my entry right here. Covering also 50 minutes for value gaps right there to then target again a 1 to 2 RR to continue higher. So 1 loss, 1 winner right there puts me up at 1 RR, sorry. So if we then continue afterwards right here, again, we're at a new all-time high. So what is the process for me when we're at a new all-time high? Waiting until we have a larger rejection, like we see, for example, right here, 4 hour value gap. We have this rejection high right there. So if we now go into the lower time frame again, from that rejection high, and on the 50 minute, we start running the rejection high right there with this candle, covering these fair value gaps right here, targeting a 1 to 2 RR, and that right there was another trade on gold, putting me up at arguably 3 RR right there. And then afterwards, right here, what we see is late during the week, we see a very similar thing. So we create this rejection. We have this fair value area right here that's preventing us from continuing higher at that moment in time. The moment we start running that rejection high right there, that is when we can continue higher as well, which happened right there. Didn't take that trade. I missed that trade. I was very comfortable in bed at that moment in time. I had my eyes still closed, essentially. So here we start to continue higher as well, targeting. We are rejecting from that 50-minute value gap right there quite largely. And then here we do the same thing. Overtake that resistance, run the rejection high. Here there isn't trade opportunity. Yes, 10 of the week. So very similar to what we talked about last week, for example. I didn't want to take those trades because it's end of the day on Friday and end of the week. So it's very likely that we are going to create a consolidation like this, if that makes sense, right there. That was a very eventful week, you could argue. Lots of opportunities right there as well to get involved on gold and indices, and they have provided very, very, very nicely. Now, when we take a look at this right here, something I really want you to pay attention to, and we've documented this process to get to this account as well on YouTube, right? So there's just videos about it, etc., how we got here, etc., etc. Now, one thing I think is very important to understand, like I mentioned a little bit earlier, and thank you for SVY for mentioning that, it is important to understand the equity curve that you're seeing right here. So see how this is a very, okay, winner right there. Let's see, winner, you take a loss, but the loss doesn't take out your account. You have another winner. It builds up your account. You have another loss. The loss doesn't take out your account, and we have another winner. It's a super steady equity curve right there, in all humbleness. So what I think is very important to understand right there is that this is how you want to go about these prop firm accounts. This is how. So you're very steadily building your equity curve, and in the long term, that's going to pay you a lot more than going for one large payout right here, full daily drawdown right there, risking on one trade to get to one payout, potentially get banned or even denied the payout. Again, that's not sustainable in the long term. If you want to use these prop firms long term and eventually want to, let's say, up your capital to 7 to 8 figures through investors or whatever it might be, then you want to have a steady equity curve. The more volatile an equity curve is, the more dangerous it is. So when you see a volatile that moves like something like this, where we move aggressively higher, aggressively lower, and then this again, that's super volatile. You don't want to have that. That's not ideal, because then the risk management is a real liability, if that makes sense. That's very important to understand. So right here, also what you'll notice is, again, I start this account in drawdown, right? 1% drawdown right there. What I think is very important to understand right there is that you need to keep your head calm right there. Keep your cool at that moment in time. Just keep executing the trading plan right there. Keep focusing on your risk management right there. Quite frankly, I can confidently say I'm never going to blow this account. Now, that might come to haunt me later on. But I can confidently say I'm never going to blow this account. Why? Because my risk management is very good. So it's going to take me 100 trades before I might blow this account right here. And that's going to keep me in the game in the long term. And then slowly you can start stacking these payouts right here over and over and over and over again right there. So for example, if I didn't have this, my investor, for my main account, I trade for investors. This is just a test account right here on FTMO. My investors are very happy with me. Why? Because I have a very steady equity curve right there. I'm not volatile up and down. My investor doesn't need to check the broker every single night. Oh, what is Arjo doing? What is Arjo trading? Oh, what is happening with my money? No, it's super steady. It's super reliable in that sense. So that's very important to understand for your trading as well. All right. Let's see. We all have. Let's see. I live in Americas. I am Dutch though. I am Dutch. Yes, I live in Americas. Let's see. Does that make sense, everyone? Does that make sense? Let me know your thoughts. How was it? How was your week in trading? Did you take any trades? Was there any trades you want me to go over, for example, etc., etc.? Let me know. Thank you very much. If it ain't Dutch, it ain't much. Perfect. That was a good trade. Thank you. I took this. Nice. Gold forever. Nice. What do you think of US 200 or US 2000? Same approach. Yeah, same approach. Very similar approach right here. For example, this approach, the approach is just universal, right? Universal. So what I mean by that is, on your US dollar right here, it's a week of consolidations. So it's not that interesting, but it's the same thing. If you're trading in between these PD rates, it's the same thing. So for example, on EU right here, if we start trading these, trading above these highs, running those highs right there, it's a clear path to now target these highs right there. It's a clear path to now target these highs, for example. So it's essentially the same thing, same approach. It was a good week. For sure was, yeah. Do you think this week was unusual? Yeah, I saw someone on Twitter actually mention that that it was a very unusual, very odd week for me. It was all right. You could argue, of course, I can understand that for sure. With the government being in shutdown as well, was it an unusual week regarding that? Yeah, for sure, 100%. But other than that, I think the week was very good, generally speaking. And for me at least, if you focus, for example, on a forex, then was the week very good for you? Probably not, if that makes sense, right? Generally speaking. You could argue that, Felix. Yeah. Thank you. So time do you wake up and sleep to trade in New York? All over the place, my friend. All over the place. So it really depends. For example, on gold right here, at the start of the week, I stay up a little bit longer than I usually do right here. The reason why is because it was presenting opportunities, etc. I'm 1 hour behind New York local time. So I'm in when this is 9 a.m. or 10 p.m. I'm at 9 p.m. if that makes sense. So it really depends. If my alerts go off, for example, then that's exactly when I start looking at the market. So if my alerts right here go off, that's when I start looking at the market, because then the market somewhat determines what my session is going to be, if that makes sense. Was able to mark the exact area of opportunity but struggle with the entry. It's a good step. It's a good step in the right direction though. That's a good step. Just get used. Once you see the area of opportunity playing out over and over, get used to, hey, how can I get involved right here? What can I do at that moment in time? And it's a good step in the right direction, Nikhil. All right, all right. Can we dive this week on NASDAQ and how we should approach price action when disrespect the bullish PD race, specifically around New York kill zone? So what I think is very important to understand is when I have a higher time frame bias right here, for example, on gold or NASDAQ, and I think we are going to continue higher right there, then for me, I just want to look at bias. So when we are disrespecting bullish PD race, that's not that interesting to me. Of course, again, I tweeted this today actually. And I said, once you study the markets, you'll be able to spot opportunities everywhere. For example, right here, the moment we start disrespecting this bullish fair value gap right there is an opportunity right there to continue lower, to target these swing lows right there as well. There's an opportunity right there. Or if we disrespect this fair value gap, there's an opportunity to continue lower right there as well. Spotting opportunities is not really the problem once you have the experience, because you're going to see opportunities everywhere. I can see opportunities everywhere, if that makes sense. So you'll start seeing trade IDs everywhere. But then it becomes a moment of, or there's going to be a time in your trading where you really need to decide, okay, but are these opportunities right here worth it on the long term? Are these higher probability? Are they going to bring me more profit than, for example, if I start to look at buys again? And that's going to be very important to understand. So more of the story, what I'm trying to tell you right here is the moment we start disrespecting these bullish PD rays right there, for me, I'm not looking to get involved. My poison is purely, can we disrespect these bearish ones to continue higher again? Because I know over the long term, that's where my edge is, if that makes sense. That's where I perform the best. So that is very important to understand. So usually what happens in this moment in time as well, when we create these large retracements, I go back to 50-50. I don't do anything, if that makes sense. I just wait right there until we overtake these bearish values again, and then I'm fully bullish again. But switching to bearish, I rarely do it unless the higher time frame really starts showing signs that it's turning around, if that makes sense. Let's see. What about filtering problems with NASDAQ, NES, and FX majors? If you are trading something like a Delirium and you're trading daily fair value gaps, from my experience, it's not necessarily ideal. You can potentially, in the way I currently operate, for example, you could make that work. But waiting for a daily fair value gap to stay back into it, ST plus RE, for example, I've noticed that in general, Forex works a little bit better for that. It's not necessarily ideal for indices, if that makes sense. If that makes sense. I trade anytime an opportunity presents. I try to, yes, unless the alert goes off and I'm sleeping, which sometimes happens, of course. I try to be there. Yeah, I try to be there. As soon as my alert goes off, essentially drop everything. If I'm walking the dog, leave the dog behind, run inside, take the trade. No. No, but I try to be there every time the alert goes off. Yeah. Indices, exactly. That's why, yeah, indices will go without you most of the time. Yeah, correct. Thank you, Kinsami. Thank you. Toledo questions. Let's dive into it. Let's see. See. That's too funny. Yeah. Yeah. Let's see. We'll dive into it, Bob. If I notice someone with a lot of the same, we'll dive into it. No worries. Okay. I just love seeing Arjo hold himself when someone says they took a short on a pair like NASDAQ or ES. Yeah. I feel the urge to say something. I feel the urge right here to say something. No. No, again, what I think is very important to understand, I'm going to rant a little bit about it. I feel the need to. Shorting on instruments like NASDAQ and ES, again, unless you have specific data. So if you have specific data supporting the ID that it is very profitable, it's arguably more profitable than to look to buy, do your thing, right? That's very important. Keep doing your thing. Who am I to tell you what you should do and shouldn't do? But when I see people that haven't seen the light of profitability just yet, and they're looking for shorts, I cringe a little bit, to be honest. And I'm like, what are you doing? Just look to buy over and over, and you're going to have such an easier time, arguably, if that makes sense. Yeah, that's very funny. Yeah. Hello, Sitesh. After a losing streak, I skipped this week and will start with a 10K funded next week. And suggestions for me, I was the one who was struggling with entry. Failing challenges, failing evaluations is not a bad thing. I need you to understand that. Any failure or what you perceive as failure is not a bad thing. So if I take losses, for example, I don't see that as a bad thing. But it is a bad thing if you don't do anything with the information. So for example, right here, if you had a losing streak and that's because you skipped this week, then I hope during the week that before you start your next evaluation, you looked at why you had the losing streak, what happened, why did you fail, for example, previous evaluations, etc. That's super important. You can ask me, hey, Arjo, why is my entry not working? I can't stress you enough. All the answers are going to be in your journal. So the trades that you have been taking. So for example, when someone in the MMT comes to me and say, oh, hey, Arjo, of course, then I help with that, etc., to see what is happening in the MMT. But when someone comes to me, hey, Arjo, I've been struggling, what has been happening, etc., then if my first question is, where's your journal? I need to see your journal, because when I see your journal, I have all the answers. I can give you all the answers just purely based on your journal. And if you're not an MMT, for example, then a good solution is doing that yourself. So going through your journal, what are the different patterns that lead to different outcomes, etc. And from there, then you take that, what you perceive as a bad thing, a losing streak, and you turn it into something good because you have added experience. You're now better than you were previously, if that makes sense. So that's super important to understand. So for anyone who is failing challenge, the way I see it, if you take an evaluation, that's perfectly fine. Your first evaluation is purely there to learn, to gain experience, not to make a profit. So expect to lose it, if that makes sense. But once you lose that account, the second evaluation, since you learned so much about the first one, you're going into it with double the experience, triple the experience. So you're going to do better and better and better slowly. That's very important to understand. Hopefully that makes sense. Hopefully that makes sense. Hello, Mr. Bob. Hola, Arjo, ¿cómo estás? Muy bien, gracias. Muy bien. Should I do about, today I actually have Spanish class. It's funny that you say that. Should I do, what should I do about being minus 2% in phase 2? So in drawdown, in phase 2. Okay. After closing phase 1, I tend to gamble after good trades and open trades outside of proper setups. So opening trades outside of proper setups, of course, that's not ideal, not at all. But what is very important to understand is that usually that's also a symptom. So it's not necessarily the problem in itself. So oftentimes, problems in your trading plan are going to show themselves as symptoms. Now, I'm going to try to explain it as clearly as I can. For example, before I had this area of opportunity trading plan, I had a lot of months where I was just missing trades over and over and over. So the symptom is missing trades. Is that also the real problem? Of course, it's a problem. Yes, but is then a solution to just, well, be there more, be more in your chart, try to pay attention more? Is that the real solution to the problem? No, that wasn't. What is the real solution? The solution, I didn't know exactly when and where I looked to get involved. That's why I was missing trades. So the symptom showed up as missing trades. The solution, the actual problem, I have no idea when and where I actually look to get involved. And once I know that, then I can implement the solution, and then the problem fades away, if that makes sense. So for example, in your case as well, when you open trades outside of proper setups, my question to you is, do you know exactly what a proper setup is? Or is there some doubt? For example, you might open a chart and you say, but this one also looks quite good. And only in hindsight now you can recognize, it was not a good setup. It was not an A+ setup, if that makes sense. So that's very important to understand. If you first define that, then it becomes a lot easier to stick to that, if that makes sense. I tend to gamble after good trades. Again, this is also what I think is very important to understand. Where you don't have the experiences yet, just walk away. In phase 2, 2% drawdown, that's not bad at all. Not bad at all. But the first thing you want to do, what made phase 1 so good? Go over the trades again. Why are you losing these trades right here? Is there a certain pattern to them? Go over that first. That's super crucial to understand. Because in phase 2 right there, the first thing you want to do, lower your risk. Lower your risk, so at least you don't blow phase 2 right there. lower it until you get comfortable with, okay, I have that feeling again. And then you can slowly start upping the risk right there to pass phase 2 as well. But again, you're currently in a 2% drawdown. If let's assume that you need to make 5% profit, so you need to make 7% profit. You already made 8 or 10% in phase 1, so you can do it. It's just psychological a lot of times, but you do need to take the steps right there. What has been going well, what hasn't been going well, adjust right there. Very important. Hello, Ron Jans. Ron Jans, wow. That's very funny. The real Ron Jans here, guys. Thank you. And let's see. Hoi, Anonymous. Hoi, this is, I assume you're Dutch. Okay, let's see. What do you think of a low trade frequency? I trade FX majors plus gold, and I have a trade frequency of like 1 to 2 trades a month. Sometimes only 1 in 2 months. Okay. I'm laughing a little bit because the Ron Jans, it's it's the last thing I expected to see today on the live stream. That's very funny. Okay. Let's see. What do you think of a low trade frequency? Low trade frequency, to me, there's nothing wrong with that. So let me explain it a little bit. Okay. Let's see. Can you see these lines? Let me make them a little bit more clear. Why are they so thin? Oh, let me see. Here it is. This is the one. Never mind. Okay. Let me copy this one. There it is. Okay. When you start trading and you learn about concepts, what is going to happen is a lot of times you're going to take too many trades. So for example, right here, this is the extreme of too many trades right here. Because you think you've learned magical concepts, and what tends to happen is that you're just going to execute anything that looks remotely all right. You have no idea what high probability is. You have no idea what low probability is. So what tends to happen is that you're going to be on this extreme right here, this extreme on the right side. Now, that means usually you take a lot of losses. So at first, you're just going to trade and take a lot of losses. This is not a bad thing, by the way, because again, we can turn that into a lesson. Why? Because that's a lot of data. That's a gold mine of data that you have at that moment in time. So when you take all those trades and you go over the data and you get a better idea of what high probability is, usually you swing, so the pendulum swings to the other side, right there, to the other extreme. You're going to too few trades right there, to almost no trades. So let's say, like you mentioned, 1 trade in every 2 months. Now, again, if you are a position trader, if you really trade a higher time frame, you have a lot of capital at your disposal. There's nothing wrong with that. Absolutely nothing wrong with that. When I trade Delirium, for example, I used to also take maybe 1 trade a month, maybe 2 trades a month. And these were very high probability trades. And it was working. There's nothing wrong with that. And with the capital that you might have, for example, if you can allow to do that, there's nothing wrong with that, if that makes sense. But usually what we can try to do is find the balance a little bit more right here. The balance that we have in the middle right there. So if I want to make this green, let me see. There it is. Okay. This is the perfect, the sweet spot right there. The sweet spot between your win rate, your true win rate of your edge, and the maximum potential profit, if that makes sense. So if you can find that sweet spot, that's perfect by potentially getting a little bit more loose with rules. So the way I see that is when you take too many trades, probably you don't have a lot of rules. You're just going to take everything that looks remotely all right? Then you go to too few trades, so almost no trades. Usually what tends to happen is you're going to be super picky. So you're going to have maybe a lot of rules or things you need to take into account. Oh, this doesn't look that good, etc. What you can do is, for example, if you focus on news trades, and that is a huge limiter in the amount of trades you take. Okay, let me remove the news rules. Let me see what that does. Does it increase my trade frequency? Okay, perfect. Does it increase my maximum profit at that moment in time? Okay, perfect. And then you can slowly experiment with taking away a few things. If that doesn't work, then add it again. And then experiment step by step, seeing what is working, what isn't working. But again, like I mentioned, I would rather be on this side right here with too few trades right here. I don't want to be on this side. I'd rather be on this side. So you're already on a very good side, if that makes sense, with too few trades right there. Let me know if that makes sense. Let me see. Hello, Ronjans. How are you doing? Can you explain how to confirm the running of a rejection high/low on the time frame lower? Let's see. Of course I can. Okay. For anyone who doesn't know, Ronjans is a bit of a meme, especially around my age. It's a bit of a meme in the Netherlands. I grew up with a lot of memes around Ronjans. Very funny. I mean, can you explain how to confirm the running of a rejection high/low on a keukenrol? Yeah, let's see. Okay. Can you explain how to confirm the running of a rejection high/low on the time frame lower? For example, when I wait on a 4-hour time frame for a fill of a 2-candle rejection, the context already got hit. I can't think properly. Let's see. Can you explain how to confirm the running of a rejection high/low on a time frame lower? Yes, I can. Okay. For example, when I wait for a 4-hour time frame for a fill of a 2-candle rejection, the context already got hit. Yeah, very good question. Ronjans, let's see. Such a random thing is very funny. Okay, let's see. Okay, right here. Let me regather myself. Okay, this 4-hour value gap right there. We have the 4-hour value gap that we need to disrespect by running this rejection high right there. The moment we start running that rejection high, like you see right here as well, again, if I wait for the 4-hour right there, it's too late because I'm going to miss the move. So the reason why, and usually where this tends to happen, if the area of opportunity becomes smaller. So the area of opportunity right here is not that large compared to, for example, the previous area of opportunity right there that we have. This one's a lot larger. So right here, the moment we start running this rejection high right there, I want to go into the lower time frame. Now, what is important for the lower time frame to understand is that, for example, you could have also looked at this rejection high already right there, and then go into the lower time frame to see what we're doing, etc. But if you look at this rejection high right there, you might have gotten involved too early right there. So what is important is that at least you want to have somewhat of an idea of what the first same time frame, the first candle wants to do right there. Because this is already a rejection. Now we just need to run this rejection high, and we can dive into, for example, the 15-minute time frame. And from the 15-minute time frame, it turns into a swing high, and then it becomes the same 2-candle rejection game, if that makes sense. So here, we see we sting above it. Second candle is a rejection. The moment this third candle does not continue lower anymore and starts to continue higher again, that, for example, right there, that's an entry right there because 2-candle rejection is failing from the rejection high that we have at that moment in time. The thing you might struggle with at first is that you're going to get involved too early. So you want to understand what the time frames above you are doing. Is there already a rejection on the 4-hour? Has it already happened, for example? And then you can get a clear idea of what we want to do. If that makes sense. It's a good question. It's a good question. Thank you, Duncan. Thank you very much. Thank you. Thank you. I appreciate it. Thank you. Let's see. I studied computer science in university, but I didn't finish it. Delirium is, yeah, it's, yeah. Delirium is a training plan. Yeah, correct. Okay, let's see. The meme manager, yeah. It's so random. So funny. Didn't expect that. Anyway, I'm getting too caught up in it. After countless of hours testing, adapting, and accumulating data, I got my first state of probability. Okay, nice. Backtesting and live. Okay, the live, that's important. How do I handle the euphoria? You can be euphoric. There's nothing wrong with being euphoric, right? You're a human. So laugh at jokes. Be happy that you made progress. Be happy in general. Go celebrate it, for example. Stay humble. That's quite important. So, for example, what I did when I passed my first FTMO challenge, I started bragging about it. I started bragging about it a lot. I was just like, oh, I'm going to make so much money, etc., etc. And what happened is after the first week after having that account, it just completely blew it. And just came back to harm me. So if you don't humble yourself, the market is going to humble you, essentially. The market is going to humble you for yourself. So what is important to understand is that You can be euphoric, you're human, but don't let it cloud your judgment, which is quite difficult, of course, because it is going to cloud your judgment at some point. So what is important is that you always want to stay in the middle. So, okay, let me draw my beautiful lines again. Right there. Beautiful. Okay, we have one side of the extreme, euphoric. And we have one side of the extreme, could argue angry, right there. Two extremes that are going to make you essentially take bad trades, etc. So for example, if you're too euphoric, what tends to happen is you're going to take trades that you think you're invincible. You're going to take every random trade, not really stick to the trading plan anymore because you feel like you can take on the world, essentially. Your confidence is so high, too high. You're not humble anymore. So if that happens, usually what tends to happen is you take more losses because you can't judge your trade clearly anymore. The same if you're angry right there. Of course, you can't trade clear anymore right there. That's very important. So what happens right here, you want to stay in the middle. So whenever you're angry, still try to think logically right there. Try to intercept that emotion and recognize it. When you recognize it, half the work is already done. You mentioned to me you're euphoric. That's already half the work done. Because you now recognize you are euphoric. It's dangerous when you are angry, when you are euphoric, and you're not aware of it. Of course, after the fact, you're going to be aware of it, but during, you're just going to, if you get into such a heated argument, who knows what you might do. You get so angry that you start doing all these things that you would never do if you think logically. So what is important right there is when you recognize it, first step is done right there. 50% of the work is done. Now you just want to remind yourself of, okay, what am I actually looking at right there? Let's get back to reality right now and see, I still need to actually apply this. I still haven't gotten my payouts, for example. I still am not funded. Okay, let me get back to reality right now and just focus on my trading plan ahead right there. Can I confidently execute that right there as well? And that way you slowly get back to that middle, that balance, if that makes sense. That's important. But again, being euphoric at this moment in time, there's nothing wrong with that, as long as you realize it, which you do. All right. Hello, Anonymous. On the dollar chart, when it was bullish last week, which area would you consider the second line of defense? Is the wick of the candle from the 11th September or body of the candle from the 22nd of September? Okay, let me see which one you exactly mean right here. So you mentioned the 11th of September and the 22nd. Okay, let me see. Which one? 22nd right there. What was your question? On the dollar chart, when it was bullish last week, which area would you consider the second line of defense? Is the wick of the candle the body of the candle 22nd? Okay. When it was bullish right here, initially the second line of defense right here is, okay, like that. It's this one right there. This one. That's the second line of defense for me. When we are bullish right there. So we want to continue lower. This is my second line of defense right there for me at this moment in time. So if we want to continue lower, we should run that right there. If that makes sense. To then continue lower. Is that was your question? What is quit trading delirium time zones? I went from the Netherlands to the Americas and completely different time zone. So the time zone didn't align with delirium anymore. I tried to do it, but just couldn't. I just couldn't. Didn't work, if that makes sense. If you have price running towards a rejection high, but there's still a potential resistance area, breakaway gap, do wait until it's gone or just enter. If we are, well, depends. What do you mean? Where would the breakaway gap actually be? That's my biggest concern right there. So if there is still a breakaway gap right there before we actually run the rejection high, yes, that is a bit of a concern. Other than that, if it's above the rejection high, I wouldn't worry too much about it, if that makes sense. So ideally, I do wait until everything is gone right there, if that makes sense. If we are actually running the rejection high. Probably, I would have probably stayed with delirium if I still lived in the Netherlands. Yeah, probably. Most likely, I would bet so. Hello, Ali. No worries. Thank you for your question. Sometimes I'm done with my daily target, but my trading setup still forms afterwards. So should I trade that setup? If at first, right there, Well, actually, let me reframe that a little bit from a different perspective. If your daily target is hit right there, then at first you might want to stop. And the reason why is because you might not have the experience to understand clearly, okay, is this still a very good setup? But if your data, for example, starts to show you my daily target gets hit and I have already met my daily target as well, but there's still good setups, high probability setups afterwards as well, then what I think is important to understand is that you can start experimenting with that. Just try seeing if you can execute it a little bit as well afterwards. That's right. That's right. That's purely a data question, if that makes sense. And notice when price is running a swing point in 1 or 2 time frames below, order flow keeps holding. Is that good to confirm that we are running swing point? Yes, it is. Yes, correct. You could argue the moment we reach a swing point, for example, and we do confirm order flow, essentially again, if it holds still, it's also a good confirmation if we are running a swing point. Correct. Correct. Oh, my nose. Is the delirium much different to your current strategy? A little bit different context areas. It's not, it builds on the logic of delirium also quite a lot, if that makes sense. I wouldn't be trading my current trading plan if it wasn't for delirium, if that makes sense. But it's a little bit different, but it builds on a lot of the ideas of delirium as well. I took 4 trades this week, area of opportunity, trade plan, one win, one loss, 2 break even. Okay. The break even trades both hit take profit afterwards. How can I adjust my psychology to align with the trading plan? Okay, if this is the case and you notice over and over that your break even trades hit take profit more, then they, again, the reason why you have break even most of the time is because break even is there to, well, is to prevent losses, right? But if those break evens turn into missed winners, then there's something wrong. So you might not want to go break even at all, if that makes sense. So if that shows for your trading plan as well, then you simply want to walk away, because the moment it hits stop loss or take profit, there's no reason to look at the chart at that moment in time, if that makes sense. So just walk away at that moment in time. Gold. Hello, Johnny. Gold. There was a 4-hour rejection high this afternoon at 2:30. Okay. They got a run on the 15-minute chart. What can you do if you miss a no resistance run? What time frame entry? Let me see which one you mean. Let me see. You mentioned the 4-hour. This afternoon, USD plus 2. Let me see. There it is. Okay. It's the one I suspected. Perfect. Okay, let me see. Okay, the moment we start running it, right there, you want to use expansion candles, ideally, to enter. So this candle right there, that would be interesting to enter right there. So, well, as you can notice already, this would be on the 50-minute for me. 4-hour, potentially 50-minute right there. See if we can have an expansion entry right there above all the highs that we have right there to then target high covering the most recent order leg that we are going to create, and then targeting a 1 to 2 hour. That's what it would look like. If I miss the original one right there, I ideally don't want to look to enter until we have a new leg right there to continue higher. It's almost too late during the day, during the week. But if I miss the original one, ideally I don't look to re-enter, because otherwise my entry might turn into something like this. Stop loss becomes a difficult story, because now I can't cover the same area. Well, I can, but then the stop loss becomes very large. So the 1 to 2 hour turns from arguably a day trade into a swing trade right here. That's not ideal. But majority of the time, it's really going to be about these expansion candles right there. So the second candles of fair value gaps, if that makes sense. Those are the ones I want to look to enter on. If that makes sense, Johnny. I'm ready to start trading with small capital with the purpose of collecting data so journaling to sharpen my edge. How do I choose a broker? Any other advice? You can also, if you want to, choose a prop firm instead of a broker. You can do a broker as well, but I just think overall the ROI with a prop firm is going to be a little bit larger in the long term as well. Broker, you want to do your research. The ones I suggest is usually if you're into CFDs, for example, it's IC Markets. If you are into for stocks, for futures, etc., I use majority of the time I use majority of the time interactive brokers right there. This one right there. And the other one is, I believe IC Markets also here. There it is, IC Markets right there. If that makes sense. The thing is, what is very important to understand, when you start trading with small capital right there, if it's a prop firm, if it's a broker, it's all right. That's your choice. But what I think is very important to understand, so the other advice is start very small. Again, even if it's just a very small amount that's on the line, it still is going to feel so much more real than a demo account or whatever it might be, if that makes sense. So that's quite important to understand. So, and that's also the purpose of it, because you take it more serious, if that makes sense. So you're going to also learn a lot more, and you're going to learn better, arguably faster. So that's very important to understand. Don't expect it to, or do not go in with the expectation that that amount right there is going to go off and you're going to make extreme profits. No, it's just purely there, like you mentioned, collecting data and journaling. Very important to understand right there. Keep me updated. You always talk about entry on expansion candles. How do you know if it isn't going to close as a rejection and reverse? Part of the game, part of the game, part of the game. But if it's, so the way I see it right here is that if I enter on this expansion phase candle right there, it has a chance of reversing right there for sure. But that's very important to understand the area that you are entering in. So do you have the right area? And when you pick the right area to enter in right there, you're not really going to run into that problem. I don't really have that problem, to be honest, in my trades. It's never really been a problem in my trades. It's purely because the right area to enter in right there. From another perspective, what is the cost right here? So for example, right here, if I don't enter on this expansion candle right there, I miss the trade. So if I use a fair value gap right there, I miss a trade. It wouldn't have been a winner right there afterwards. So I would rather take 10 trades where maybe 4 times it happens that it reverses right there, but the other 6 trades are just good overall and are winners. Okay, that's perfectly fine. Or, and that would be around 8 RR, for example, if you target 2R. Or it would be the case that you have 10 trades, but 5 of the times you miss the trade because you enter on or you wait for a fair value gap. And of those 5 times, the 5 trades that you do take, maybe let's say 3 winning trades and 2 losses right there. And it's going to result in 4 RR, if that makes sense. So you may double just by the probabilities, but by understanding the probabilities and entering on, they were more likely to run, if that makes sense. Of course, in theory, but that's just that's the way I see it, if that makes sense. So how do you know it? You're not really going to know it. Your best bet is to find the highest probability area to enter in. About Ultima High protocol, what about the resistance above the last or first fair value gap? You always target Ultima High. I mean, what has to happen to stop Ultima High protocol? It's a good question, actually. It's a very good question. So right here, if we have something like this, where we reach a next target right there and we start to continue lower right here, if these fair value gaps, for example, right there, start to actually hold, and we do not overtake them, so we do not overtake them to continue higher like this, then if we keep holding these bearish fair value gaps right there, we keep disrespecting the next PDAs, we run those lows right there, and slowly this Ultima High protocol would fade away. But it would fade away to a different time frame, because, for example, then we have a daily fair value gap to continue lower right there that we could potentially overtake. Or once this daily fair value gap right there eventually turns into a weekly fair value gap, we have a weekly fair value gap that we can overtake. Once that turns into a monthly fair value gap, we have a monthly fair value gap that we can overtake. But then these same time frames, if you go into the higher time frame, the Ultima High protocol still stands, just on different time frames, if that makes sense. But in the short term right here, we can adjust to, for example, take a look at shorts right there, because they are higher probability at that moment in time, if that makes sense. I always target Ultima High in general. Yeah, correct. Yeah. So if the order flow resistance fails, then the Ultima High is the main target right there. Yes. Hello, John. How can I select better entries? I understand the bias, but I still make mistakes in choosing the right one. First of all, before you dive into entries as well, it's very important to understand the area that you are entering in. So find the right context area. And once you find the right context area, the entries are going to be easier, better as well. That's very important. Once you understand the right areas, for example, the area of opportunity, you can slowly start seeing patterns in those entries. And then it's just about really sticking to one, if that makes sense. So, but before, because you understand the bias, that's very good. The next step is understanding the area, where those entries are likely to hold, if that makes sense. And that's sometimes what people skip because they go from a bias to then already look for an entry. No, it's first bias, narrative context, then it's an entry. And the reason why it's quite important, because the reason why we have a context area is because that's where an entry is more likely to hold, if that makes sense. So for me, that's this area of opportunity right here, right there, for example. That's where an entry is more likely to hold. So that's where it's a higher probability to enter, if that makes sense. All good, SPY. All good, all good. Thank you for today. Thank you, thank you. Let's see. It's my last question I'm going to answer as well. Discipline trader right here. We're going to be back on Sunday, 2 p.m. New York local time. Potentially a little bit longer live stream as well on Sunday. So if your question is unanswered or anything, feel free to come back and ask it again on Sunday. Hello, Discipline trader. Sometimes we wait for token rejection to disrespect and then target our draw on liquidity, but we miss the move. How can we capitalize on it if we have 4-hour rejection high or rejection low? Okay. We went over this a little bit as well earlier. But for example, if you have this rejection high on the 4-hour, it's about running this rejection high, right? This one. That rejection high is what on the lower time frame? Let me see. What happened? I can't mark it out anymore. Anyway, this is the rejection high right there, right? So if we go into the lower time frame right now and we go into the, let's say, 50-minute time frame. My internet not working. That's a shame. That's a shame. Does FTMO allow US traders to use MT5? I'm not entirely sure, to be honest. I'm not entirely sure. Hello, I want to get into trading. Will MT help guide me with a routine strategy I can use and learn? Also wanted to ask about the pricing. Thanks, Arjo. Yes, it does. It does. Feel free to go to tradingmmt.com and you'll find more information as well. Right there. Feel free to reach out. It's not working. This is a sign. This is a sign. Anyway, when you have that rejection high, to answer your question, when you have the rejection high without the chart, it's going to turn into a swing high. That swing high, you just apply token rejection again. And then you can see on the lower time frame if we're already running that rejection high. So in smaller areas of opportunities, that's what I like to do, for example. All right, team. Thank you. Thank you. Thank you. Thank you very much. I can't show it on the chart at this moment. I'm not sure what's happening, why it's not working. I would love to. I'm not sure why. Ooh, Joel, I'm not entirely sure what top step rules are in that. I'm not entirely sure. Let me check for you, actually. I think they work with a trailing drawdown. I think. From what I see, it's 2,000, I believe. On a 50K account. I believe. Oh, there's a max loss for you. Usually, if I take one loss, the pricing is still good. I can take another trade. 2 losses, not my day. Move on, if that makes sense. And usually that's going to be then round up to 1%, for example. All right, all right. Oh, there it is. I can still show it. This is also a sign. So that rejection high on the 4-hour time frame right here turns into a 15-minute swing high. Then it's token rejection from the 15-minute swing high right there. That's failing right there. And then we can confidently say we can get involved right there. So that is, I can use the lower time frame to then already look at it, if that makes sense. If that makes sense. All right. Thank you, everyone. Thank you, everyone, for being here. Thank you, everyone. We're going to be back on Sunday, 2 p.m. New York local time. That's where we have the forecast. We're going to go over questions again. Could potentially be a little bit longer as well. and we'll dive into everything as well. All right. Thank you, everyone. Take care. Have a great weekend. We're going to see each other on Sunday, and I'll see you at the next one. We have an elite offer, VR, in the MMT, which is private coaching, arguably. Thank you, everyone. Take care. Have a great weekend.